Hey everyone, welcome to the KE Report, another daily editorial, Friday, August 22nd. Going to be talking the moves in precious metals, especially the underlying equities, as we're chatting with Dave Erfle. Dave is the founder and editor of the Junior Miner Junky. Now, Dave, you were on vacation. We haven't chatted with you in a month. It was July 22nd last time we chatted, and let's just recap what's happened in that last month. Technically, gold really hasn't done anything. It's around the same level that it was at least on the spot market, where it was on the 22nd, actually slightly lower. On the stock front, that's where the interest has been. GDX is up 12% since the last time we chatted. The juniors continued to go on a run, but I've noticed over the last couple weeks that those have faded back a little bit. But the majors consistently have been in almost this melt up phase where any weakness seems to be pretty quickly bought, and it's 1, 2, 3% just grinding higher and higher. Hence why GDX has done so well in that time. And silver has held up very well as well. So again, it almost seems like more interest has been shown to the underlying equities as the metals prices have mostly gone sideways and continued to consolidate. It seems like a very positive end to summer to me. It's exactly what I wanted to see, where the majors started to pick up a little bit more steam and a bit more confidence, I guess, from investors. But Dave, your take on this market, what are you seeing out there?
Yeah, it's pretty amazing. Ever since the bear market in the miners turned into a bull market, the surprises have been to the upside. I mean, if you're talking about the gold price, it ran up to 3,500 5 months ago, and now it's been caught in this narrow trading range and trading within another bullish symmetrical triangle, right? I mean, that's what gold price has been doing ever since it broke out. That 13-year cup and handle pattern, it rises and it gets into a bullish symmetrical triangle consolidation pattern, and then it breaks out of that and does it again, and it's happening again. And this one's a lot longer because the gold price got so overextended when it hit 3,500. But within that time frame of over the past 5 months, the miners have reported two consecutive quarters of record profits, right? I mean, they're they're reporting expanding margins. Their balance sheets are getting healthier. They're paying off debt. They're reporting record profits. So that's happening within that time frame. So the gold stocks are just playing catch up, right? I mean, the GDX, as you said, it just hit over 60. And the last time it was in this range was when it hit that area at its all-time high back in 2011 when gold was trying to break $2,000 an ounce. So gold stocks are just catching up here. I mean, with costs basically flatlining over the past 2 quarters, the gold price has gone up about $700. So these miners are just reporting fantastic profits, and investors are finally getting the message that, hey, gold stocks are the place to be. I mean, if you look at the GDX, it's up 75% this year now, while the S&P 500 is what, up like 5%. So, yeah, I mean, and like you said, this is what we want to see. We want to see going into the end of summer, where we're generally conditioned over the past few years to be figuring out what we're going to sell for tax loss and what we're going to get into before the next big move. But the big move just continues to go higher. And every time it shows signs of looking like it's going to finally correct, the weakness is bought immediately. I mean, it happened this Tuesday, right? We had a big downdraft. Gold GDX was getting close to that record all-time high. So I'm sure sector participants who aren't on vacation thought to themselves, "Hey, this is finally a correction where I could put some of my money to work that I've been waiting to get into some of these stocks that just continue to move higher." Well, it lasted a day, and the GDX is right back up to now, like I said, it's all-time high.
Yeah, Dave, it's the same kind of bull market playbook we've seen in other markets where pullbacks are more shallow than you're expecting. They're less time than people are expecting. All those people on the sidelines that are waiting to put money to work on quote unquote pullbacks have to jump in there and be pretty nimble because then it takes off again. And like you say, the surprises are to the upside. I've also been impressed with silver lately. It's back above $39 as we record this, and the silver stocks have been on a steady march higher. When you look at the gold and silver stocks, just on the producers, not just the seniors, but the mid tiers, the small producers, they're up about 100% to 300%. Do you think we're getting a little overdone here, or is this just solid bull market action and the catch-up trade that was long overdue?
I think it's a combination of both. We are getting overdone, but like I said, I mean, each time we have a downdraft, the weakness is bought pretty quickly. But if you take a look at the bullish miners percentage index, right? I mean, that's something that you could follow and try to gauge when we're going to see a correction. That's at 100%. That means that every single gold stocks is in a bullish posture, and it can't go any higher than that. And it's flatlined now for the past 2 weeks. It's only gotten to 100% one other time, and that was during the huge run up in post COVID in 2021. So there's going to be a correction here that's pretty imminent, but how long it lasts and what it's going to look like is going to be interesting because, like I said, the weakness continues to be bought. I mean, there are some levels to watch as far as strong support. If you take a look at the GDX, there's pretty strong support at 50.51. And if you look at the GDXJ, there's pretty strong support at 64.65. So if we do start to see, a healthy correction, which we're definitely due for, I would look at those levels. But as far as juniors are concerned, there's still several that need to play catch up. While they're like Corey mentioned, there's a lot of them that are overextended with the miners. So if you're looking at getting into some of those, you might want to wait for a correction in some of those stocks because all of a sudden, like you mentioned, Shad, gold stocks are now trading like Nvidia, right? We look at a company like Nvidia, which has been the darling of the stock market for so long, and now with the market cap of $5 trillion, it continues to go up, consolidates a little, goes higher, consolidates a little, goes higher, and that's what gold stocks are doing now.
Yeah, look, this is a bull market for gold stocks. There's no denying that. Yes, there's a lot of other bull markets out there, but gold stocks are doing very well. They are vastly outperforming gold, considering gold hasn't done much in about 5 months. And silver stocks, those have gotten a lot of interest as well. And again, the juniors went on a tear just a few months ago. Almost every junior moving up, even without any news, and all raising money in oversubscribed financings. No one's going to deny that this is a bull market. And yes, fine, breadth, 100%. Can't get any higher than that, but it can stay extended for a while. But that's why I think the most important thing to look at is what do we need to look out for if a longer term top is forming, not just a corrective move that is a buying opportunity. What sort of characteristics, Dave, differ in a bull market where we get a normal correction or a bull market where a longer term top is being formed?
Well, if you look at this sector, the gold sector in particular, long-term tops never form with a sideways move. Long-term tops usually end with an exhaustive move with an intraday reversal on huge volume. So I would look for something like that maybe in the gold stocks and especially in gold once because if you're talking what a breakout will look like in the gold sector from this 5 month consolidation, the symmetrical triangle breakout to the upside, the target is 3850 to 4000, and 4000 is also the target from the cup and handle breakout, the 13-year cup and handle breakout from 2000 2100 back in March of last year. So in the gold price, that's what you're looking for on the upside. And but if it can also break to the downside. The odds are, I think it's a 67% chance technically that the symmetrical triangle ends up in an upside breakout. But in the event that it ends in a downside breakout, the level to watch is 3,200. If we see a weekly close below 3,200, then you can look for 2,850 to 3,000. There's strong support there. The 200-day moving average in gold now is above 3,000. So the market's starting to price in a pretty strong floor at 3,000, and that's what the miners are doing also. So that's what you want to look for. And as far as silver is concerned, you're looking for $40 first, and it's $1 away from there as far as the silver futures price is concerned, and then the all-time high, which is 50. I mean, look, the gold, the silver is still almost 20% below its all-time high reached back in 1980. I mean, I don't know of any other commodity that's still that far below its all-time high from that long ago. So silver is still massively undervalued, but I digress here. If you're looking for support on silver, there was a massive breakout at 35. So the 34, 35 area is strong support. And the upside, the target is that all-time high at 50. I mean, I've been saying, over the past several months that I'm still expecting a $4,000 gold price and a $50 silver price before the end of the year. And that would be an 80-to-1 gold silver ratio. Today, the gold silver ratio is trending lower. That's very bullish. It's down to 85 now. 75, there's pretty strong support at 75. But yeah, if you're looking at upside breakout levels, those are what you want to look for.
Well, Dave, I think people listening would know that I'm pretty bulled up in precious metals. I've got a couple dozen positions in gold and silver stocks and royalty stocks, so I'm a fan of the sector. But I do have to bring up a point again that you brought up at the onset about the BPGDM, the Gold Miners Bullish Percentage Index. I distinctly remember the end of 2010 and 2011 that it got up. In 2010, it got up to like 93. It didn't get up that high in 2011 at the peak, but if you think about 2016, it briefly got up to 98 to 100, and that was the top in that summer of 2016. If you look at the summer of 2020, it got up to 100, and I kept writing to people on our blog saying, "Hey, this thing means that everything is everything is awesome," until it isn't, and that was the top. The fact that we're at 100 again right now, and if you think back to 2010, 2011, people were just sure gold was going to go to 2000 and beyond. And people were just sure that the $50 level in silver wasn't just going to be broken, but it was going to blast way past that 1980 level. Just to take the other side of the fence on this, the bearish case, is it possible that we're at that point in the cycle where everybody's glad handing each other and high fiving each other and putting party hats on right before the end? Is it possible that that 1/3 potential, the 33% potential is what plays out here? And we look back and be like, man, we should have known it when the BPGDM was at 100 that we were getting frothy.
Well, everything's possible, right? But if you look at the fundamentals, macroeconomic and geopolitical, I don't see a long-term top being formed in the gold sector here. And if you take a look at the retail participation levels in gold stocks and especially juniors, I don't see a long-term top being formed either. So, but yes, I mean, it's possible. I mean, peace could break out all over the world next week. Trump's tariffs can all of a sudden reduce the debt by what they say. They expect that it's going to reduce it by $4 trillion, while at the same time his big beautiful bill is raising it by the same amount. I mean, but I just don't see that happening. I see debt levels continuing to go higher. I see the bond market continuing to be nervous. The US dollar now has moved right back down below 98 after Jerome Powell basically came out and said what the Bank of England said already a month ago, that their damn inflation, we're still going to lower interest rates. That is very bullish for the gold price. So yeah, I mean, a correction, absolutely. A short-term correction, it's due at any day now. But I see the weakness being bought, and I don't see the downdraft being that large once the weakness starts to be bought.
Well, only time will tell, but Chad is right. We do hear the same things at tops. It is also bull market, but yes, I heard the same thing back in 2011. Things couldn't get any better. Oh, the debt keeps on rising. Geopolitics will continue to get worse, and that they very well might, but that's why I think it is also just important to understand maybe some key levels to watch on the charts and take somewhat of a level-headed approach when you do get those pullbacks, but also embrace these runs higher. Dave, if we filter down to the stocks, I know you don't play in a whole lot of the majors. The majors have continued to do pretty well, but when it comes to the developers, smaller scale miners, even the explorers, again, a lot of these stocks have done very well. Do you notice any disconnects in terms of sector or subsector specific gold or silver stocks that you think are kind of undervalued compared to this revaluation that we've seen?
Yeah, I mean, I still see a lot of the earlier stage companies as being very undervalued. A lot of the late stage companies have rocketed higher. And fortunately, myself and my subscribers are in several of them. We've had several of them triple from our entry from our average cost. And I preach taking 1/3 profits when that happens. So we have four stocks that meet that criteria now. So we've taken profits in four of those positions. Now just waiting for these stocks to eventually get taken over, which it certainly looks like they eventually will. Because if you take a look at the miners, I mean they need to start adding ounces now that they've got these healthy balance sheets. We've talked about that in the past, but yeah, I'm looking. The Beaver Creek conference is coming up here in a couple of weeks, and I'm looking forward to having meetings with a lot of the higher risk, earlier stage companies on my watch list that I'm looking to possibly take entry positions in. And when you start to get in the second, third inning of the bull market, which I think we're in right now, as far as the miners are concerned, a lot of these companies have gone so high that you don't want to chase the ones that are on your watch list. You want to take a look at the ones that are maybe higher risk, that maybe the market is overlooking, and they've got some pot. Basically you have to sharpen your pencils a little more and do a lot more research and look at the companies that you expect to go higher as opposed to the ones that have already gone higher. And it's getting more and more difficult to find those. But that's the challenge, and that's why I love the sector so much. So I do have several of the companies on my list that I'm possibly looking to get into one or two with some of the cash that I built up in the portfolio recently. So I'm really looking forward to the Beaver Creek conference, because I mean I can't remember ever going to a Beaver Creek conference where the sector has been this bullish. So it's going to be interesting. Usually we go to this conference and we're waiting for the next shoe to drop and wondering which companies we want to start accumulating for when the sector eventually goes higher. Well, it's a totally different case this time. So first of all, I'm looking forward to catching up with a lot of friends and colleagues in the industry, because I haven't been to a conference in a while. So I'm really looking forward to it. And like I said, there's a lot of companies I'm really looking forward to meeting and speaking with.
Yeah, Dave, I'm getting pretty excited about going to Beaver Creek as well. So we will both be there, Corey and I. But the other thing that we know that happens around Beaver Creek is right afterwards, the Denver Gold Forum. And that's when the big boy producers are there. And a lot of times they're scoping out the scene at Beaver Creek and having meetings with the juniors, because we see a lot of M&A come out of this event, or we see strategic partnerships, or we see investments from the majors into the juniors. Are you expecting to see a lot of that coming out of this event? And would you be disappointed if post Beaver Creek some of the companies that you hold in your portfolio do get taken out? Would it steal the future that you expect in those stocks right now?
Yeah, it's funny. I definitely expect to see some M&A activity come out of this conference. But yeah, like you mentioned, on the one hand, if one or two of the stocks in our portfolio gets taken out that already has huge gains, I mean, you're not going to be upset too much, because, you've done really well with the stock and you can rotate that investment capital into something else. But on the other hand, I for one feel that several of these companies still have a long way to go. So I'd like to see them rise on their own first before they get taken out at a market premium by a major or mid-tier.
Oh, let's see some M&A. Hey, if M&A happens in the next few months, it's not coming off 52-week lows. It will be
Right.
coming off of 52-week highs, if not all-time highs for some of these stocks. So
No more
again,
take
that
unders.
would just be a nice rotation of money still within the sector. And yeah, that's still the thing that we're waiting for, is the majors doing a lot of M&A, but we have seen a lot of the mid-tiers picking up the slack there. So hey, a lot should be coming in the back half of this year as traders get back to their desk. And look, the sector's doing very well. I don't think there's much, if anything, to complain about right now. Everyone's account, I assume, is quite a bit higher. And quite frankly, hopefully this momentum continues, even if it is due for at least a short-term pullback. I really do think the most important thing we can do right now is hold your positions and just be aware if there's any sort of a top forming. But to your point, Dave, we haven't seen that blow off move. It's been a pretty steady climb. We'll wrap it up here, Dave. Thanks for taking time with us on this Friday. Again, Dave Erfle, the founder and editor of the Junior Miner Junky. Click the link in the show notes to visit Dave's website. Dave, have a great weekend.
Thanks, guys. You too.